I'm Dr. Theo Spirakis from Bexley Dental, and I can give you back your smile. With the All-on-4 dental procedure, I can put an end to broken and missing teeth and uncomfortable dentures. Book your free All-on-4 consultation now at bexleydental.com.au.
This podcast is brought to you by the Clarendon Homes Supercentre at Parklea. Come and explore this mini neighbourhood with 13 display homes in one location and a 2-storey playhouse for the kids. clarendon.com.au.
The Informed Investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Every Monday night, Charles Tarbey, Chairman of Century 21 Australasia, joins us. Charles, good evening to you again.
G'day, Steve. How are you doing?
Good, thank you. Are we, as a country, no matter what state you're listening to us in, talking ourselves into a housing downturn? It seems to me that every day there's a negative story about housing prices.
I know, it's really quite interesting. It's negative when it's going up, it's negative when it's going down. But they are sprinkling out a little bit of information to say that some capital cities still have growth, which is nice. Most of the talk, of course, is the wonderful world of Sydney and Melbourne. I'm in Auckland right now speaking to you, and the marketplace here in Auckland has also slowed down, but it's not slowed down the way Sydney and Melbourne has, because they don't have the same issue with the Royal Commission into banking. So they're getting a slow move. You used to get a 95% loan here. When you're talking finance, I challenge people to try and get that somewhere in Australia right now.
I wonder why New Zealand is then so protected from this buffeting. I mean, you mentioned the Royal Commission. Yes, that is an issue. But I would have thought Auckland would have been more likely to follow the trend of, say, somewhere like Sydney.
You'd think so, but the migration here into this part of the world is really quite significant. There's a lot of people coming from Asia, a lot of people coming from India. This used to be the gateway into Australia for residency. That's changed somewhat, but this is the place. This is where people are still coming to, and it's a relatively young country commercially. And when you compare it to the rest of the world, and so Sydney and Australia in many ways. But no, it's not impacted by it. This is what you would normally get in a slowing market. You get a lot of property, a lot of buyers, and people negotiating. That's not the case in Australia. We have that, but the Royal Commission and the election regarding Labor's, talking of removing negative gearing, those sorts of things are really piling on top of each other to create an environment that really doesn't exist, Steve. Really doesn't exist. How would you
describe the Auckland market compared to Australia? I mean, are houses affordable there?
Yes, they are. I mean, Auckland did go crazy for a little while there, and there's a lot of apartment complexes built here, but they were luckily enough where the population growth was filling them, and they weren't slowing down. They were one of the first to slow down international buyers into their farming land, but they didn't slow international buyers down into their residential market, which they needed. They needed to keep moving along because when real estate's moving, a lot of the economy is moving. So they just haven't had the same impact. They're going into a standard normal real estate market, but it's being done in a sensible manner.
What are you hearing about people having difficulty accessing finance back in Australia?
Yeah, the biggest issue some people are saying to face right now, of course, is banks. The issue with those, the valuers are now very, very protective because the valuers got blamed very badly for what happened in the last boom, and it wasn't the valuers' fault. They got caught in a market that changed very quickly. I think the biggest issue we have is that the banks have changed the way they're lending, so they're not giving you as much. In terms of valuation. Valuations themselves are nudging back because of the concern with what's going on. I think we've spoken about the fact that some suburbs in Sydney, banks are very concerned about even lending on in some parts of Australia. And in many parts of Australia, they've increased the deposit you need. They've widened the gap in the loan value ratio, which means people are needing not 10% or 20%, in some cases up to 30% to buy in some suburbs.
So that's not going to be fixed anytime soon because the banks have been so badly bruised that they're not going to suddenly change their behaviour. So if you're going to be required to have a 20% deposit and you have to pay off principal and interest, it's going to be very difficult.
It's going to be extremely difficult. And the part that's really coming out of all of this is the fact that talking about commissions, real estate agents, mortgage brokers, commissions and so on, and there's some banks that don't even pay mortgage brokers commissions. Those sorts of things are starting to challenge a whole range of areas. For instance, if all of a sudden they removed incentive for people to want to earn money, then you're going to get a whole lot of people working inside banking that really it becomes a process and there's no incentive, no motivation. Capitalism is somewhat removed. And the whole thing is changing. And if you talk to bankers, as I do on a regular basis, they're all a bit unsure about where it's going.
So the auction clearance rates at the weekend were down again. Now, would that almost be the last weekend of auctions, wouldn't it?
Yeah, look, they were up slightly last week, Steve. They jumped up, particularly in Sydney, over 50%, which was nice to see. They're back under 40s, but I think it's a sign of the times. Not many people are really committed to buying just before Christmas. It becomes a bit of a problem. Only those who need to. People are being transferred or need to sell because they're being transferred.
Oh, we just lost Charles's number there, so we won't bother to try and get him back. But those clearance rates on the weekend remained in the mid-40s, expected to fall below 45%. 2,614 properties taken to auction across the combined capitals, down from the previous week when there was 2,749. Preliminary results, a national average clearance rate of 45.3%. But that's expected to fall below 45%. Melbourne had 1,283 auctions. There were 853 auctions only in Sydney, with results showing a 48% clearance rate. In Perth and Canberra, the clearance rates were about the same, 43.8% in Canberra and 33.3% in Perth. So they're doing it particularly tough.